Good morning. Today is Monday, October 13th, 2014. This is Dan McElwee bringing you Ventura Wealth Management's weekly economic newsletter, The Profit Margin. We begin with our statistic of the week. Market timing woes? If an investor placed $10,000 in the Dow Jones Industrial Average in December of 1998, it would have grown to $25,000 by December 2013. Had the same investor tried to time the market and missed the top 10 performing days, that figure nearly halves to $13,000. We turn across the world for a global perspective this morning. The International Monetary Fund had a poor assessment of the global economy last week, adding to the pressure felt by international markets. Lingering concerns over debt in the last recession still cast a shadow as reinvestment has been weaker than normal. Our chart of the week looks at import prices. Import prices fell in September 0.5% and have contracted 0.9% year over year. Lower oil prices led the decline. The figure matched analyst expectations. Now for this week's commentary. There was only one suitable word for last week's market action, ugly, and there was no alibi. Concerns over global growth pressured equity markets. In a week that contained the Dow Jones Industrial Average's biggest back-to-back gain-loss since 1997, also serendipitously in October, many investors were left feeling seasick. The Dow fell 2.74%, and the S&P 500 contracted 3.14% in weekly action, leaving the Dow in the red on a year-to-date basis. Unfortunately, the troubling data was not contained to the nation's two bellwether indices. The Nasdaq, which has higher beta tech positions, retreated over 4%, as we wondered where all the analysts chanting "buy the dips" had gone. Oil moved into bear market territory, and certain sectors of the market fell well over 8% on the week. International indices were not spared from the sell-off. As many analysts tout the strength of the U.S. economy, we pause to consider the concept of decoupling, where the U.S. and international economies and markets would move independently of one another. Many said this would happen in 2008, where the world would remain strong despite a beleaguered U.S., and during the Euro crisis, where the U.S. would remain strong as Europe faltered. In neither situation did the concept come to fruition. While markets may at times shrug off slower global growth, we must remain cognizant of the impact global growth has on U.S. multinationals. Caution is advised. In the week ahead, Wednesday and Thursday seem to have the most amount of economic news. We'll see retail sales, producer price index, Empire State Manufacturing, business inventories, and the Beige Book on Wednesday. And Thursday, we'll see jobless claims, industrial production, the Philly Fed survey, and the housing market index. Thank you, and have a great week.